All right. For those of you who are joining, we just started our really exciting, awesome talk, funding conversation today with Chibo Tang with Gobi Partners. I'm super excited to have Chibo to be on our conversation today because he's one of the most active investor in Hong Kong. And before introducing Chibo, just really quick, a few housekeeping item. For the next 30 to 40 minutes or so, I'm going to do a lot of question Q&A back and forth with Chibo. But I also want to do a quick advertising. Our next conversation will be on May 17th with Joe Chen, Mindworks Capital, also super active investing in Hong Kong companies. So make sure that you sign up for that. I'm going to share the link shortly. And before, I'm going to actually stop sharing and then also start my video. So for those of you who are joining us now, or maybe the first time with us, or maybe this is, I don't know how many times, just want to remind that Founders Hong Kong is a nonprofit organization with the goal to help Hong Kong founders, regardless you're in Hong Kong or the rest of the world, about connecting you guys with Silicon Valley, particular focus on awesome investor that actively invested in Hong Kong people. But on top of that, a lot of growth experts, my co-founder, Philip, often bring a lot of go-to-market, B2B growth, engineering, sort of share experience with all of us. So this is part of the series. We do this at least twice a month. So welcome to be with us. And now I'm going to actually bring up Chibo to turn on his video so all of you guys can meet him. Chibo and I actually met, I guess, a long time ago. I don't even remember where, but definitely like
probably in Hong Kong.
Probably in Hong Kong, and definitely when I was still at 500 Startups. But yeah, like I'm just so excited to chat with you because particularly with Gobi and plus the Alibaba Entrepreneur Fund, just been very active. I think every single success case in Hong Kong, you guys have invested. So in some sense, really wanted to learn more about your work. But before we go into sort of on the fun side, Chibo, maybe you can share a little bit about yourself. Like how did you make your way to Hong Kong? Why Hong Kong and your whole story?
Yeah. No, thanks for having me here, Edith. Obviously we've known each other for quite some time, and I think this is the first time we've actually done an event together.
Yeah.
So it's exciting, and thanks for having me. I guess just a little bit on myself first. I was born in Shanghai, so I'm Shanghainese. Moved to the US when I was 3, and then grew up in Boston. And so that's where I spent most of my time when I was in the US. Moved back to Shanghai after graduating college, and I've been in Asia since 2007 basically. And did a few years consulting, joined Gobi in 2009. So I've actually been in VC for quite a long time, 13 plus years now. And I think in the early days, I really spent a lot of time trying to localize and get to know the local ecosystem in China. I actually was very active in trying to stay away from Hong Kong because I thought that Hong Kong at the time, it was kind of that in between. And if you really wanted to get to know the local market in China, you had to be on the mainland. And like, to be honest, I mean, like I am Shanghainese, so going back to Shanghai was like going back home. So I did enjoy my time there. But I think after a number of years investing in China and working in China, I mean, I think it was you got a sense of the local market and the competitiveness of startups and VC out there. And then I think just as we're starting to get more active in Shanghai and China market, this opportunity in Hong Kong came up, and that was in basically end of 2015, early 2016. And so at that time, basically Alibaba, led by Jack and Joe, they decided to carve out about $1 billion Hong Kong dollars to support the local ecosystem here in Hong Kong. And so they called that the Alibaba Entrepreneurs Fund. They put that money into a foundation, and then majority of that money they actually took out to form the Alibaba Entrepreneurs Fund, which was a VC fund dedicated to support the local ecosystem here in Hong Kong and also Hong Kong entrepreneurs. And so they became the sole LP of that fund. We as Gobi Partners, we became the GP. And for that, I moved down to Hong Kong basically. And that's really what kind of started my journey here. Obviously in the early days, the ecosystem here was super early. There weren't a lot of startups. There were not a lot of, like high profile entrepreneurs. I think, probably at that time, one of the most high profile was, one of our close friends, Norma Chu of Day Day Cook. And that was a quite a well-known startup, and she was a well-known entrepreneur and, from Hong Kong going into the mainland. And I'm sure we can talk more about that. But I think that all kind of kick-started this journey that has lasted about 5-6 years now. And obviously Hong Kong has come a long way. Gobi's come a long way here, and I've come a long way. And so it's been a great ride.
Yeah. Now, on that note, I think I obviously have tons of questions for you, but since you just mentioned when you first started in 2015 to Hong Kong, the startup ecosystem had quite nascent. In some sense, it's still nascent. But now I felt like Hong Kong has at least 10 unicorns, if not more. And
more. Some reports say that there's up to 18.
Wow. That's
I maybe I think that's a little bit exaggerated, but I think like the number between like over a dozen to 15 should probably make sense. But either way, that's more than Singapore already. So I think it's definitely come a long way and proven a lot of people wrong.
That's amazing. So in that sense, like compared to, I guess, 7 years ago, what's the biggest change that you see or experience in terms of?
I think the biggest change is, over this time period, I think that there's been a lot of like in the app world, they're called hero apps, right? I think like in Hong Kong, there's been a lot of role models and hero startups, so to speak, that have come out. And, I think as more and more startups out of Hong Kong, reach a unicorn status, as they become more public and, well known, then I think that there are a lot more people that are putting more faith in the ecosystem and what you can actually accomplish here. And so because of that, a lot more people are actually joining the ecosystem. A lot more people are quitting their jobs in finance and professional services, and they're going into these startups. And I think that mentality shift is probably one of the biggest driving factors. I think it's kind of almost gotten to a point where it's like a zeitgeist, right? Like the whole society is now pushing towards this direction. Like all the stakeholders are coming to the table. I think in the beginning, obviously Science Park and Cyberport, some of the government initiatives, they were more active and hosting events and things like that. Obviously, our Alibaba Entrepreneurs Fund with Jumpstarter and a lot of our own ecosystem building events. We were early on. These days, there's a lot more like incubators, accelerators. A lot of the corporates are coming to the table. A lot of the universities are coming to the table. They're rolling out their own fund programs. They're rolling out their own accelerator programs. The government is even doing more, like putting like a lot more, like billions of dollars actually into like fund managers and like matching schemes, right? So I think that there's over the last 5-6 years, like a lot of that has been rolled out, and that just kind of the trend is just so clear now, right?
Yeah.
So it's a lot safer for people to kind of join the ecosystem at this point.
That's awesome. So in that sense, what you're saying is definitely a lot more investment or participant. That not only like the startup community is growing, the investment community is also growing, which is awesome. Let's on that note, on the investment side, what do you focus on in terms of stage, industry, location? I'd love to learn more like about your focus.
Yeah, I think, obviously, when we first started, we were primarily investing out of the Alibaba Entrepreneurs Fund vehicle. And so that was a vehicle that was primarily focused on more early stage startups with some kind of nexus to Hong Kong. And that nexus was defined as either they, were founded in Hong Kong.
Mm.
They have, founders that are from Hong Kong, either, citizens or PRs, some relation to Hong Kong, or there are companies that are open to, coming to Hong Kong, either opening offices or hiring people here, right? And, I think that was, even though like we were, relatively sector and stage agnostic, I mean, that was probably like the most, defining factor, right? Of, the startups that we invested in. Today, I mean, not only are we investing out of that fund, we also have other funds, right? So our own Gobi funds here, and our new AEF GBA fund, which is a more growth stage focused fund and focused not only just on Hong Kong, but on the Greater Bay Area, right? Which is, the 9+2 city developmental region in southern China that includes Hong Kong and Macau. And so, with that, I mean, like, I think the scope of what we can do is also much greater. But of course, I think coming from Hong Kong, I mean, we still do have very much that DNA to be supporting everything to do with Hong Kong.
That's awesome. So what are some of like the like theme or trends? Because from like the Pernetics of the world to the GoGoX or to DataCook, there's like so many various different vertical, but of course that's also from a few years ago. Any interesting trend, and you think that maybe COVID sort of pushed everybody at home and so crazy, now there's new thing that's coming up that we may not even know about?
Yeah, well, I mean, I think given our past experience here and looking at all the startups, I mean, I think fintech and AI will continue to be strong sectors for Hong Kong. I mean, I think that Hong Kong just has such natural advantages in those areas and a lot of talent that those will continue to be important sectors going forward. In terms of new sectors that we're looking at, I would say a lot more around enterprise and SaaS. There's a lot of startups like that that find it easier to expand outside of Hong Kong, and there's quite a bit of talent here in that regard. I think we're also looking into sustainability. So everything from like new materials to electric or autonomous type vehicles. I think that those we're seeing more of as well. I would also say, healthcare is something that has come to the forefront given the pandemic and everything. And that's an area where, Hong Kong and GBA are also pushing on the regulatory front. So, those are areas that, we would be spending more time on. Outside of Hong Kong, within the GBA, I mean, like Industry 4.0, like, supply chain, those are all areas that are very important for us as well.
Got it. And out of like your portfolio companies that you have invested so far, are you seeing more when, let's say if I'm an entrepreneur, are you seeing more entrepreneur like go to China market, or are you seeing more Hong Kong entrepreneur that is going to Southeast Asia or the US? Where is go to market for most of these?
To be honest, I mean, I actually think it's a good mix of everything. I don't see like, people from Hong Kong going like more into the mainland than normal. I think like there's just as many that are going into Southeast Asia, just as many that, are even looking like globally. I would say that a lot of the startups that, start their companies here in Hong Kong and need to expand to tap into a larger kind of talent pool, a lot of them will open up offices in Shenzhen. That's not to say necessarily that they will be focusing their, the marketing or their product for the Chinese market, but that is to say that, they would just open an office in Shenzhen to hire more developers, just because there's a much larger pool there, and then just have those developers work on like, back end, mid end, or whatever for their product and their ultimate target market.
Yeah, makes sense. Makes sense. So in this case, let's say I'm an entrepreneur and I'm just starting out, and now it's awesome that you cover from early stage to growth with different people. But what are the key things that you look for? If I'm like super early stage, I guess B2B and B2C a little bit different, but let's say I'm like an enterprise SaaS and I wanted to pitch you, like what are some of the key things that I should make sure that I address if I pitch you?
Yeah, I mean, that's a good question. I mean, I'm sure all entrepreneurs like really want to know. I think For us, I think addressable target market. I mean, I think that's always an important kind of thing to be considering. Like the business model and competitive landscape; those are all interesting. I think unit economics and how you think about scaling and the next 12 to 24 months of forecast. I think that those give a sense of your momentum and how you think about growth. I think those are all important for us because we do look to invest in very high growth companies with scalability and a lot of upside, right? But at the end of the day, it really comes down to the founder, their profile, their energy, their vision and their commitment to what they're doing. I think we've seen a lot of different types of profiles of founders, whether they're local Hong Kong or expat or something in between. And we if you look at like our founder base, I mean it's a lot of you can find a lot of similarities there.
Yeah, yeah. So how is the Gobi this investment decision like? So a pitch and like how long does it take to pitch you? Do I have to pitch you and then pitch another committee? How does it work?
Yeah. Well, I mean, I think at this point, we are getting a bit larger. So, I think, the general process would be to, speak with someone on the investment team first. And, they'll do some initial work. If it's something that they feel like is meets our criteria, then they would push it to ultimately a partner, right? And then a partner would come in, usually, I guess, myself, and take a look. And I think within like one meeting or even half a meeting, I mean, I kind of get a sense, right? And if this is something that would be interesting for us to continue to look into. And oftentimes, just after that first meeting, like we'll already have some kind of internal direction as to whether or not this is something that we want to push forward or not. Obviously, there would be outstanding issues that we would then continue to do due diligence on. And see, what if those things check out. But I think throughout that process, we are generally very direct. And whatever we think, we usually will tell you. And if there are issues that we think need to be addressed or that you need to answer as part of the due diligence process, I mean, we'll be upfront about that. I mean, I think that's just kind of my style as well. Like whenever I'm in a pitch or whenever I'm in like some startup competition, whatever, I'm always very direct, right? Like my feedback and my questions are generally known to be like that. So I don't think that we're we're a black box or where like people don't understand why our viewpoints are the way that we are, or ultimately why we decline. I mean these are things that we communicate or we try to communicate quite well.
And what would be your average or range of check size these days for early stage?
Yeah, I mean, so we as I mentioned, I mean, we have different vehicles. I mean, I think for the smallest vehicle, for very early stage seed funds, I mean, we would do anything from 250 to 300K. And then, I think from up to like our growth stage funds, I mean, we could be looking into $10 million checks. And, I think if there are companies that we are even more convicted on, I mean, we're always open to bringing in co-investors among our strategic and LP base.
Got it. That's awesome. I sometimes I also invest. I guess so far we only have one, which is Dated Cook. Hopefully there's more. A lot of times, I found that a lot of the Hong Kong founders, when many of you guys pitch, the minute that we talk, you start showing me the product. And I think I love the fact that, Chibo sort of mentioned it's really about the market, the team, metrics, like there's a whole, I guess from a pitching point of view, you sort of talked about the things that you look for. Is there any common mistake that you see, particularly for Hong Kong founders, that is missing? Any tips for them to sort of improve? Yeah, I mean, I think for, and maybe I'll draw from some recent experience here. I mean, I think, one thing that we've noticed, from meeting so many startups on the ground here, I mean, there are some founder teams that try to overthink the process and try, almost to treat it as a game, right?
it's like, it's like, in this fundraising environment, I mean, there's never perfect information. And so some people try to game that system, right? And they'll say, oh, like we've got 2 term sheets on the table already, right? Like we're like, they're pushing us to sign by next week. Like if you want to get in or you want to get allocation, you got to give us a term sheet by Friday, right?
Really?
And it's just like, it's something where, look, I mean, you're in this process not to get a term sheet, right? That's not the goal. Like the goal of the process is to ultimately get an investment from an investor that you can believe in and you feel like can help you, right, with more than just money, right? And so like finding someone like that and kind of cementing a relationship with someone like that, I mean, like it needs to come from a foundation of strong trust, right? Like, and this is something where, as I've gone out fundraising in the last year or so, I mean, like in talking to my LPs, I mean, like trust is really the foundation for everything, right? I mean, like an investment, whether that's an LP commitment or an investor or a VC investing into a startup, I mean, like that's a long-term commitment. And if you don't have that trust from the very beginning and you continue to build upon that, it's not going to work, right? And so, this is something that, we dealt with in a very recent, pitch and startup, right? I mean, initially it seemed like, this startup had a very interesting product. It seemed like the market was quite big, and we were quite excited about it, right? But then the management team starts playing games with us and just like, look, I mean, like we got 2 VCs chasing us and, term sheets on the table. I mean, if you want to be able to leave and want to get in, I mean, you got to do something, right? You got to give us a term sheet. And so, before doing any due diligence, before, like really putting in much work, I mean, our hand was forced to, come up with some kind of term sheet to continue the conversation. And it turns out like the moment after, we get that term sheet signed, it's, like, oh, all the other term sheets, they decided to go away or, like we're not following up with them and, there's no pressure anymore. And we're just like, come on, man. I mean, it's just, we've been in this game for so long. It's just so obvious when, people are trying like to play games and to try and push, like force a hand or, to try to push the process forward. And, ultimately, we're probably not going to move forward with the deal, but, I think it's just, it doesn't reflect well on the entrepreneur. Ultimately, it's not a good look for the investor either, right? Because like we are very rarely, if ever, issue term sheets that we end up not following up on, right? And so it's just like, it's just not good for the ecosystem, right? And so I think that's something where, this happens in China quite a bit too, right? In mainland. And, sometimes like people will, issue term sheets or even, some kind of wire some money before anything's even done just because they want to lock the deal down, right? But, I don't think that that's healthy for the ecosystem. And I just feel like, for entrepreneurs and investors, I mean, like they should, be trying to build a foundation of trust.
Yeah, I trust me, I've been really active in the Web3 crypto investing. Yeah, money really is a commodity in some sense. It's really about, and for the entrepreneur in the room, a lot of times, like if you have an early investor, so let's say with Chibo invested in you, the later stage investor, if they're doing their job, usually will ping the previous investor and ask them, are you going to continue to exercise your pro rata, continue to invest? And it's a really, really bad sign if your early investor, institutional investor don't follow on, and usually will tell the later stage something. So you definitely don't want to start the relationship with the wrong foot, and really should start it with a very, very trusted partnership from both sides.
Yeah. And at the end of the day, I mean, like the ecosystem, especially here in Hong Kong, I mean, it's just so small, right? And so like, if you're going out fundraising and you're dropping like so-and-so names and, like left and right, I mean, it's like, oh yeah, these guys are following on, these guys are, they're issuing a term sheet, or these guys are super interested deep in the process. I mean, it's just so easy for us to just kind of ping someone at that firm and just be like, look, I mean, are you guys looking seriously at this deal? Right. And that will tell a lot.
Yeah. And Chibo, you just remind me of, there's one incident this is an investment we're looking at in the US. And this couple guys come from Slack. And then he would tell us, oh, Stuart, which is the founder of Slack, Stuart is investing. And then my partner, Alfred, actually knows Stuart. And he pinged him. He's like, oh, so you're investing. And then Stuart replied, who? What? And then he responded, should I invest? He's like, no, they said you already invest. So please don't lie, because like this whole community is so small. And the minute that you say anything that doesn't check out, it's just completely turn off any investor who want to ever talk to you again. So definitely be transparent, and it's really about like building long-term partnership. So on that note, for the audience who are in the room, and feel free to actually ask question over the Q&A. And then I'm going to actually ask one of the question by anonymous attendees. But other than that, I'm going to actually bring you guys up on video to ask Chibo questions live. So feel free to add your questions in the Q&A or in the chat, and I will bring you up. So I'm going to actually start with the anonymous question, which is, what's your take on Gobi, GBA, or AEF stand on Web3, NFT, blockchain, since mainland China now is not 100% about certain things in the crypto world? What do you think, Chibo?
Look, I mean, I'm on that space in general. I mean, like, I'm open. I think that there's a lot of opportunity there. I think obviously that whole ecosystem is still very early stage, and so there's a saying in China that the water is very deep. And so, for a lot of investors, I mean, they may not know what they're getting themselves into. That being said, I mean, we are investors in Animoca. We are investors in Ember Group, and a number of other Web3 related companies. But I think for our funds, I mean, like, we don't do token raises or investments. We are only equity investors. But I think we keep our eye on that space, and we continue to make bets. I do think that metaverse is an exciting trend, and something that will come to some level of more popularity and widespread adoption at some point in the future. So that is an area that we continue to look into. So yeah, I mean, I think generally, we do spend time investing in that space.
Cool. I do invest in tokens, so if you guys are looking, happy to chat. Although I agree with Chibo's, is not Web3 is not only about crypto. There's plenty of awesome companies that is a purely equity, which we're all open to look at. With that said, I'm actually going to bring up, maybe start with Bernard Lang. Give me 1 second, okay? I'm like multitasking. I'm going to bring
an expert at this Zoom webinar thing.
That's
how to do this.
Cool. I'm going to bring up Bernard to ask the first question. Bernard, maybe tell us about you, your background, and ask your questions.
I didn't realize we were doing this live. So I'm currently more of a free agent here in the startup world, I would say, previously at some major US startups. And I'm wondering, I guess it's kind of multifaceted, because the problems you mentioned regarding these, all those situations you described where there were some critiques about the way certain people behaved, right? It's like, well, one, I guess, like how might we help those people improve rather than only critiquing them is one. And I guess what kinds of foundational problems might be plaguing the ecosystem as a whole, because these kinds of relational dynamics may not just be limited to, okay, investor versus entrepreneur. It's not, we try to not create these sort of adversarial relationships and dynamics.
No, of course, and I totally agree with that. And I think the best way is really just for these entrepreneurs to, go through the processes multiple times, right? Or just like, continue to talk to investors and get feedback and like I think events like this are helpful to showcase the investors' thoughts on these processes and these interactions. And entrepreneurs themselves should talk amongst themselves to kind of see what the best way and what has led to a successful raise for some of them, as they've gone through the process before. I think none of us go into these conversations and wish for it to be adversarial. I mean, from Gobi's perspective, from my perspective, I mean, we're always here just to kind of support the entrepreneurs, right? Because at the end of the day, the entrepreneurs are the ones that are driving the ship, right? I mean, they're the ones that are manning or captaining that boat that investors ultimately hop onto to try and add a little bit more wind in the sails, or try and move the whole thing forward. I mean, I don't think that investors are the most important part of a startup, right? I mean, by no means. It's the founders themselves.
Yeah. On that note, just to add on, since Bernard that you asked, I think in general, for you can actually, I did another talk on like actually how to pitch your startup. There's a process in some sense that you can also create when you approach an investor. Just to start with, at least for me, the best companies that I have invested in are either from our portfolio founders, warm introduction for people that we already invest in, always best. And then after that is investor that we know well. These are usually sort of the best source in terms of referral that investor really like. So just to start, I think many of the founders in the room, if you want to do research to figure out how do you actually get to investor, the warm intros from just is on both of our website and who we have invested in. So it's actually quite easy to find. And then also the key thing really is about to build that relationship. There's like this whole process of doing it. I always, now with COVID, it's a little bit hard. I highly suggest that when you actually, the first conversation really should be conversation, not just a deck, because it's about building a relationship. And if an investor really interested, I'm sure Chibo and I, both of us, to fight for the awesome entrepreneur, we want to meet you face to face. So there's like a process for really like building long-term relationship. But of course, sometimes, there are bad behavior, but really we always wanted to encourage good behavior as well. Okay, with that, thank you, Bernard. Next, I'm going to bring up Alan. Just give me 1 second. Of course, I'm always trying to multitask sometimes. Let's see. Oops. 1 second. How come?
Hello. Do you hear me? So I was thinking like the current status of China or like Hong Kong being stuck with COVID, and is it driving the VC investors to be more conservative and be more focused on later stage startup? And one more question would be like, do you worry the current status like now would be breaking the supply chain, making like the things to be worse in these few months?
Yeah, so I mean, I think that there's a number of questions in there. I think with regards to the pandemic making investors more conservative, I think as a generalization, probably yes. I mean, I think that there is a considerable amount of uncertainty out there. And a lot of investors, given but obviously different across the different profiles of investor, they will be more conservative in deploying capital. But I think for us and professional fund managers that have live funds that need to invest, I think that we're more active than ever. I think that in terms of like early stage or late stage, the impact on investors' appetite for those types of deals, I actually don't think it's a factor of the pandemic really, but more a factor of the public markets and the sentiment over there. I mean, I think that actually, given the depressed valuations these days for many tech startups, especially out of China or this part of the world, I mean, I think that more and more investors are actually going earlier stage rather than later stage. I think that, a lot of investors that were previously focused on the pre-IPO rounds, I think that they are, they're realizing that that's not a very safe asset class at all, right? Like most of the pre-IPO valuations are higher than, 6 months post-listing. And, all these investors are now underwater. So I think everyone from, Tiger on down, and, I think that everyone is going earlier stage. And so, I think that is a good sign for, well, maybe a good sign for early stage entrepreneurs, and that there's more capital focused and on your stage, but at the same time it will become a lot more competitive, and valuations may get out of proportion, and ultimately for some startups whose growth momentum isn't able to keep up with those valuation increases, I mean, we're going to be looking at some painful down rounds and flat rounds in going forward in the next couple of years. So, I think that is kind of what we're seeing. And I kind of forget your last question. Supply chain, right? I think that that's something that obviously will affect different startups in different ways depending on your business case and what you're focused on. So I think that's a tough question to kind of answer in general.
Yeah, sure.
Cool, thank you, Alan. And I'm going to bring up Alex from 3DK Tech. Alex, please show your face.
Hi. Hi, can you hear me?
Yep.
All right, great. Thank you for having me. Thanks for the sharing. So I'm Alex, the co-founder of 3DK Tech, a metal 3D printing startup, pre-seed stage, focusing on aviation, the aviation market. My question to you would be, when you deal with analysts and directors from VC firms, one of the things that I've read in a book called Venture Deals is to kind of gauge the interest that a VC might have in your startup would be to ask for an intro straight with a partner to see if there's any interest. So I guess at what stage would you recommend to ask that question, or should that question be asked, and or should we let the director or the analyst do that themselves?
Yeah, I mean, I think, I guess just to share a little bit about the dynamics within a VC firm, right? I mean, I think, depending on the size of the VC firm, I mean, there could be, multiple analysts, like a lot of number of people on the investment team that the partner has to deal with. If there are many deals being fed up to the partner, then these analysts also need to pick and choose, or be selective about who they actually recommend up to the partner, right? Because ultimately that will reflect upon their own judgment and their how the partner views them in terms of the startups that they feel like is worthy of continuing on in the process. So I think that number one, I think like asking an analyst for a meeting with a partner, I mean, I don't think that really necessarily is something that the analyst is most comfortable doing without having like a good idea of what you guys do, and what the business case or the argument would be. And so I think just being able to articulate clearly your value proposition and the business merits, and understanding from the analyst or the team member, like what is important for that VC in particular, in order, like in terms of like what boxes you guys need to check in order for this to be interesting to them as a firm. And then number two, I think also communicating clearly about the timeline and the urgency or creating a sense of urgency, for this fundraising round, right? Because if the analyst feels like, there's X amount of time before, they need to make a decision, I mean, he's probably not going to have a lot of motivation to push that up further until, he feels, really comfortable, right? And so if you do feel like, speaking to a partner is important in the short term or earlier in the process, I mean, I think that's, it's important to also, communicate clearly your timeline and what you hope to achieve in the next week or two, right? I mean, so, and as Edith mentioned before, I mean, I think going through that process from an analyst and going through, their kind of hierarchy to get to a partner, I mean, I think that's generally, I guess the most standard way, I would say. But being proactive in trying to find a warm intro to the partner or the firm, I think that through the portfolio companies or other founders that has connections there, I mean, I think that is actually a more important or more effective way of getting a conversation at a higher level.
Cool. Thank you, Alex.
Understand. Thank you, Edith. Thank you, Chibo.
Yeah. And Alex actually asked a very good question. I want to quickly sort of address it. Sometimes I see some founders like to sort of ping, kind of spam multiple partners in the same firm at the same time. I was, and usually, and then actually also, if you have talked to one person from the firm, I highly recommend that you just tell whoever that you talk to end up, because we all sort of compare notes anyway. And then more importantly, Chibo, I don't know how you guys structure, but for us, is each one of us is actually expert in a particular field. Doesn't matter what title that you have. We actually have an awesome investor that we hire. He's on the younger side, Bernard, but he's amazing. So the fact that just because of title may not be a partner doesn't mean that he will have less of a say. In fact, a lot of times, Chibo, you probably will count on certain of your analyst associate to give you as much information as possible. Mm-hmm. So in some sense, guys, like for founders, don't trying to sort of like, I have to see a partner. It's actually build that relationship even with the associate, because you may be surprised they have a lot of say. Yeah,
I agree with that. And they probably actually spend more time getting to know your business and the details, and would be able to kind of articulate that internally even better than you could, right? So
absolutely,
that's something that it's always worth spending time. Yeah,
and it's our job to empower every single person represent our firm. So we're never going to actually sort of pick against each other. Okay, next I'm going to bring up Mandy Kwan. And we have 15 more minutes left, and I'm always known to be on time. So ask as much question as possible. We'll stop in 15 minutes. Mandy, your turn. We lost Mandy in the ether. Maybe not. Hello?
Hi, can you hear me?
Yeah, we can hear you now.
Oh, thank you. Sorry for the technical issues. So it is nice connecting with you both. This is Mandy. So I'm currently working as a partner marketing advisor at Microsoft. So just wondering, from the perspective as a VC, how to nurture more startups in a mature stage and get them to be the unicorns.
That's an interesting question. I mean, I think that getting to be a unicorn is more a byproduct of the company's growth and momentum rather than an end goal, right? So I think that's probably one of the things that a lot of startups and founders kind of think about in a perhaps a different way. But I think getting to a unicorn is a huge milestone. But I think that it's a natural kind of occurrence and just one of the milestones on a very long journey, right? I mean, I don't think that that's the end goal for anyone. I think for us, I mean, we instead of focusing on the valuation and the unicorn status, I mean, we always continue to push our entrepreneurs to think about, their roadmap, their product, how to continue to improve their product experience and solve bigger problems, right, in society. And, I think that if they can focus on that and they can continue to execute and deliver the momentum, then, there will always be more investors interested in joining their cap table and joining the journey. And, as the company grows bigger in terms of, all the key metrics, then, that status will come naturally.
And I want to add on one thing. Thank you, Mandy, for your question. It's really not about getting to unicorn. In fact, I actually sometimes think that there's so many unicorn, it doesn't even matter anymore. The new term is actually decacorn. You've worth 10 billion plus, and I think Chibo have a couple of those. Really is about, instead of celebrating how much you raise to get to that level, really, I think we should celebrate revenue milestone. And increased number of customers and growth rate, like that are things that to me it matter even more. I think longer term, what we wanted to invest in are like good founders that focus on the right thing, and just chasing valuation longer term is not really something that just because you can be unicorn and still fail, it really doesn't matter. So anyway, thank you, Manny, for your questions. Now I'm going to bring up Kick Outreach next. All right. Kick Outreach has a question. Please show your face, your name, and company.
Hi guys, I don't know why it says Kick Outreach, but my name is Petra. I'm from Venture Labs. We're based in Vietnam, in Saigon, Vietnam right now, Ho Chi Minh City. And the question that I have, I think it's kind of related to one of the previous speaker. We are in early phase right now. We just built this, so we have a pitch deck, we have a website, we have this idea of a platform for the metaverse, which connects GameFi users and guilds as well. So we've built a project earlier that actually, it's a game that worked well, but now we want to go into the guild, which complete one of a problem that we want to fix. Now we are still early phase. My question is, how do we get attention from VCs, top VCs like Animoca's, you guys, and also what would be the best way to reach out to them without seem spammy? We don't want to look, we don't have that first impression of being a spam project, right? We want to reach out to them with the right intention on the right way. So based on your skills and experience, what would be the best way to do so?
Yeah, I think there is a lot of startups in that space, and we do get inquiries from all over the world at this point. And I think Animoca, I think, has a new fund actually, specifically focused on guilds. They also have a venture fund that is investing in general Web3. I think that there are key people there that we can introduce to you guys. I think from our perspective, there are a number of colleagues in the team that are more focused on Web3. And I think if you do interact with any of the startups that we have already invested in that space, I mean, there's one in Hong Kong called Infinity Force. That's also a guild type platform. I think that and there's a number of others that we have connections with. I think that those would be good ways. Maybe Edith, maybe you want to chime in in your wheelhouse as well.
Since you mentioned Animoca, I actually did a month ago, did another conversation with Yat. If you go to the Founders Hong Kong Facebook channel, we actually have the video. He's super transparent about what he's looking for. And then also, I think By the way, I have nothing to do with Animoca whatsoever, but I think they actually are doing a incubator, a virtual incubator right now, working with Brink, and I actually mentor a handful of the companies. Literally, is from everywhere, like from Australia to Hong Kong to companies from the US. So that seems like it's an interesting vehicle to sort of connect with them. And then last but not least, I really meant what I said earlier about connecting with the founders they already invest, not just for introduction, but actually build a relationship. Because sometimes, like if I have a founder, not only say introduction, but more like if my founder is already working with them in some sort of partnership, and that's such a beautiful way to basically expand sort of our fund thesis on that particular area, knowing that we already have somebody can vouch for you. That is a great way to get a sure introduction, and people want to meet you. And then last but not least, I highly recommend, I don't know if I have it publicly, but even you cold email, sometimes there's an art to the cold email. And the cold email itself, ideally, is short blurb on what you're doing, traction, in bullet points, like week by week. Okay, week by week, maybe too much. Month to month, my growth rate is from this to this, and really clear about your metrics.
It's kind of hard. It's kind of hard to say because it's still early phase, and it's the metaverse, which is a lot of uncertainties. There's no real use case. We're all building this uncertainties for the future called the metaverse, and scaling on something that is still vague. I think that's the hard part because there's no real data that can contribute or the growth.
And so another trick would be, let's say you're building X for X. So let's say like I'm the sandbox of, or I am the exit infinity of, whatever it is, just create mental shortcut for the investor to get it right away. There's always something that you can talk about. All right, we have 7 minutes left and we have a couple more. Thank you for your questions and hopefully it's helpful. All right. Okay, this is a final live questions from James Cunningham. Hello, James. And then I have 2 more questions for you, Chibo, and then we're done for the day.
Hi, good morning, both. Thanks. Just quick one. Chibo, how do you gauge a founding team's passion, interest, commitment to the product or the service and the company, the mission? How do you quantify or qualify that?
That's a really good question. I think it's kind of hard to quantify. If I had to think of things to quantify it, I mean, what did he leave behind, right? Like what jobs, what platforms, what how much equity or options or whatever did he kind of leave on the table to want to come and start something like this on his own, right? How long has he been in this this startup phase, right? Like how much of his own money has he put into the startup, right? Like how much has he drawn from friends and family to kind of support the growth, right? I think that, I've seen founders that, seem to be quite driven in what they're doing, but, when it comes down to it, they're still burning money and they have like a cash shortfall of like 100K or something like that, right? And something's like relatively small. And that's just not something, even though they have like, an amazing friend network and, high net worth kind of circle, they're not able to kind of raise that, right? Simply because they're not willing to open that mouth or, lose that face or, just to kind of bridge that startup through that difficult time. And, I think that's something that, it's like, dude, you have like 1 million, you have like 20 friends that could like just lend you this money, right? But you're not willing to go out on that limb and try to get that. And you're not willing to put your own money in that, could easily kind of fill that gap, right? And so, I think that's something that we've run across and we're just like, dude, I mean, like how invested is this guy in the startup, right? I mean, the startup could literally go under and he's going to like existing investors for a bridge note. And, it's something that, If it happens once, sure, like we'll try to help out as we can, right? But if it's time and again, and we're the only kind of olive branch, or like we're the only kind of white knight that could come in, I mean, like then you're not really tapping into everything, like your own personal resources. Then that comes down to your own commitment to the thing, right? I think qualitatively, it's a mix of like everything, right? I mean, it's it's in every interaction. I always say that in every kind of pitch, it's like for every meeting that you have between an investor and an entrepreneur, it's a constant process of due diligence. It's a constant process of getting to know the other person, right? Because at the end of the day, I mean, you're trying to make a very long-term commitment off of just of like less than a dozen kind of engagements or interactions, right? In person maybe, or on Zoom and in these days. And I think from the very first meeting, you're already trying to gauge what kind of person this guy is, right? Like what kind of integrity he has, like what kind of commitment, how much he believes in his company and what they're trying to do. What sort of how open-minded he is to other people's feedback, right? How coachable he is, how willing to kind of ask tough questions he is, right? Like one of our founders that we invested in, I think last year, is in the SaaS space. He's very young, but he was asking me just as many questions as I was asking him in the pitch, in the process, right? I mean, that's something that we don't come across a lot. I don't come across a lot. Usually, it's like the venture, it's the VCs and us who are asking all the questions. But he'll turn that right back around and be like, I'm actually interested. Like, what do you think about this, right? And that challenges us then to kind of come up with answers and best practices and see how we could actually help this person. And in return, he's getting a lot of feedback. He's getting a lot of advice. And as he absorbs all of that and kind of sees how those inputs are relevant for his own business, I think that's a constant cycle of learning that is very important, I think, for founders to be able to show and demonstrate. Because there are some founders who are very confident in themselves and they feel like they're in total control. And generally, like for those types of situations, I mean, like we tend to see more with kind of older founders, people with like family background or already some kind of successful career, and they're now coming out to do a startup of their own, and I think they just feel like they need a lot of control. They don't let their co-founders really talk. I mean, they're the ones that are driving this, and they really want to kind of put that hat on and have that kind of view of themselves. But that's not necessarily what we're looking for, right? Or what investors are looking for. We're looking for people who are team players, or understand like the value of everyone in their company, the value of investors, and be willing and open to take feedback and be able to kind of adapt, right? Adaptability is so important for all founders and startups. I mean, I think that whether it's the pandemic or other things, I mean, like there's always going to be curveballs thrown, and so just being able to kind of change your business and your way of thinking and adapt to kind of survive. I think that those are very important, and those are all things that we look for. I think that there's a lot there, but I'm sure there's more as well.
Thank you, James. With that, thank you for your question. I'm going to turn you back to attendees. We only have 1 minute left, and I promise everybody we're always going to end on time. My one final thoughts, and Chibo, I'd love for you to wrap up your final thoughts as well. But based on what you just said, I have a quick sort of suggestion for everybody. Honestly, it's also including myself too. I constantly, every few years, I think to show that you're one of those people that you're going to stop for, like you not stop working on this or something that's, we all need like a personal or signature story to show the fact that you will never stop with, you will make this perseverance. You're really the type of founders that we need to back. You ultimate, you are the salesperson. Doesn't matter you're selling to investor, to employee, to customers. So we need like 1 or 2 of these signature story to show the fact that you will be the type of person that do whatever it takes to build this. And that's the type of people that we want to back. But it can't be like talk about like as a third person. It's something that like I care about so much, because whatever the story is, test it with your friends, test it with your partners, but it's important to learn those stories. With that, Chibo, any final thoughts?
No, I mean, I'm just, I'm grateful to have been here today. I mean, I think that, you had a lot of good questions. We had a lot of good questions from the audience. I mean, I think for so much interest and for us to have such a good event here, I mean, it really shows that Hong Kong has come a long way. There's a lot more people interested in, what the ecosystem here is like. And, I think that's very encouraging going forward. For Gobi, I mean, we've invested over 100 million US in the ecosystem in the last 5-6 years. And we have even more than that to deploy over the next, next few years. So, we're super excited. We're actively deploying. So, if there are people that are interested in, doing something here in Hong Kong, I mean, please reach out.
Yeah. What's the best way to reach out to you?
I think, LinkedIn, emails, I think not just myself, but everyone in the team, right? I mean, I think, we do get, I myself do get quite a lot of requests and messages in my LinkedIn. So, maybe a more effective way would be to LinkedIn message or add, some of the people in the team, Gobi Partners, GBA, and, we can go from there.
Awesome. Cool. I included Chibo's LinkedIn profile for everyone on the chat. With that, Chibo, thank you so much. And Hong Kong is just getting started, and many, many more unicorns to come. All right. Bye, guys.
Cheers. Thank you.
Talk soon. Bye.
Bye.